The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy.
This episode is brought to you by Benzinga. Benzinga is our absolute favorite resource to use when we trade. We use it for news scanners. We use it for float checkers. We use it for screening. We use it for just about everything, including chat rooms and much, much more. But that's not all they have. They have YouTube as well. Hot Stocks Luke every single day has great guests on, ranging from Ripster to Mia Khalifa to Gary to all the best guests you need to hear from every single day, all day long. So make sure to go check that out. That's youtube.com/Benzinga. And if you look in the replies to this tweet, you will see how to get a discount code for Benzinga Pro. Make sure to go sign up for Benzinga Pro right now. On this episode of Pennies Going In Raw, we discuss heading into August and accumulation, part 2. Find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby.
No way.
4 fucking percent.
You asked the exact same question with 2 words different.
It's like, fuck, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in raw.
Featuring Dan, Deity Dips,
And Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going In Raw. Today is Sunday, August the 1st. And, you know, as traders, that is a scary thing to say, because August, the past few years, has not been exactly the kindest to us. We've discussed a lot. Yeah, we talked a lot about how to kind of prep yourself for August. But it seemed like, this whole week, it seemed like kind of August came early. Is that people prepping for it? Is that the COVID shit coming back up?
Yeah, it's a little bit of both. I really think that a lot of people get so scared with August. Me too. Like I hate the thought of August because my historical numbers, just my personal historical numbers, are terrible in August. I say every year that I'm just going to walk away in August, but then I never do. But the thing is that I think it is a mixture of what you just said, which is people are preparing for it. Also, it's really good weather out. I know here on the East Coast, like there's nobody in Hoboken right now.
You're blaming market conditions on the weather.
In Hoboken specifically, yes.
Okay, so one of the smallest towns in one of the smallest states.
All right. Wait, listen. We're the highest densely populated per mile or something. Am I saying that right? Probably not. But my point is that actually think about it this way. In 2 to 3 weeks, college kids are going to be going back to school. Okay. In about a month, high schools, elementary schools are going back to school. So a lot of people are traveling. That whole saying may go away. Yeah. Well, as we get closer, it's kind of like August is the climax right before kids go back to school. And then when we start to get into fall, that's when it's just a sprint to the end of the year. But everybody's taking trips right now before they go back to school. Kids are taking trips. People are taking off of work right now, especially with the COVID scares. People, who had to go back to work don't want to go back to work. I think it's really just a cluster of things that kind of bring us back to, okay, People that aren't scared of the new COVID are going on vacation before school. People that are scared of the new COVID are, selling their stocks, getting ready for fucking zombie apocalypse. So I think it's a mixture of everything. And then of course you have traders who are scared of August. So I think it's like, I don't think it's one catalyst. I think it's like death by 1,000 cuts.
Personally, are you scared of August? I didn't even trade all too crazy that much in July. And I'm looking forward to continuing my 3-month vacation.
Hiatus? Your hiatus from
yeah. I'll come back eventually. I'll come back when the market needs me most.
It's what happens when you get paid millions of dollars for the podcast.
Yeah.
You don't have
I'm actually getting paid billions.
Yeah. Dude, Joe Rogan, dude, looks up to you, bro. It's crazy.
The caller daddy girls are getting fucking jealous of my Manscaped ad revenue.
But yeah, so I think, I don't think that'd be a bad idea to, especially if I know me personally, this is when I start to get real bad burnout if I've been going hard especially like the last 16 months. I mean, I feel like I honestly sometimes don't know the days because it feels like the last 16 months has just been an entire sprint. I don't even remember like 2019. Like I don't remember most of the months because everything has been the same.
Oh yeah, before 2020 didn't even really exist. There's pre and post COVID for me. But no, I think one of the cool.
It's two different worlds.
Yeah, one of the most important things I think about going into August is one thing that I like to do is set a limit on how much I can lose because when the market's slow is whenever you really find yourself revenge trading and it really not working out. Sometimes you can revenge trade and, you can get that money back. But, in months like these, it is really crucial to have a lot of self-discipline when it comes to not trading and, everything about it. Because you're going to make the same mistake you did the first time. And there are a lot more mistakes available to make now. There is no rewards for fucking up. It's all very crucial.
Yeah. And I talk about this every time I talk about August, but this is when I usually give up my year. Like no joke. I would kill it the first 6 to 7 months of the year. And then August, I would just, in 6 weeks, I would genuinely give up like half of my gains. And again, it goes back to what you were saying about revenge trading. And so actually I was talking to a trader and he's a pretty good trader. And he was having an issue even inside July trading. And that's because he's a day trader, a really great dude, a skilled trader. And so we talked about, scaling back and he sent me a message just saying like, dude, this is saving my ass right now. Is like, because I still get the itch to trade, but my win percentage is like 30% right now. So I'm really not losing that much. He's like, but I'm still like learning. And I'm like, that itch is, I'm still able to scratch that itch of being able to go into a trade. But he said, I lost like 1 week's worth of gains throughout the last like month of crappy trading. So it just goes to show that yes, nobody wants to lose, but there's a big difference between losing 30% of your account in 1 week, because again, you start to get to that third week of losing. Like when I go on like a cold spell, you haven't really had like a cold spell, right?
Either I think you're combining the terms dry spell and cold streak. Dry spell being you're not having sex, and cold streak I think is the one you're looking for. No, I mean like there have been times
cold streak. That's what I meant.
Where like 3 weeks in a row you're just like, and it happened more of like last August, and I refer to it all the time. Like I can't allow that for a multitude of reasons. One, it took me prior to last August, like I think it was literally like July 30th. I had that massive up halt of 700% on a stock, and I made like 20%. What was 20% of my account then? That was all gone by the end of August. And if I didn't have that buffer, I would have been like that would have really messed with my head. And I have a lot more risk management now, so obviously that won't happen again, but at the same time, just losing day after day after day, even if it's just like I said, even if you do set a limit, it's like, hey, I'm only gonna lose $500 a day max. Even once you see that 500, 400, 600 for 11 days in a row, you're like, shit, like what am I doing wrong? But you got to think it's better than it being 3,000 a day.
It's way better. And I actually really like what, there's a few firms out there that, are prop traders that, they basically trade the same things that we do. They just trade them with like a complete systematic. So the older guys will have more of like a hunch trade, but they completely systematic trade. And one of the things that they do is that they have a daily P&L lockout. So if you hit this, no matter what day, what month it is, if you hit that lockout or that amount of a loss, you're done for the day. Or you're done for the day. That you just get locked out of your computer. And I actually really like that because, it is so easy to just sit there and be like, okay, this one, and then you chase the top. And then it's like, this one's running. If I can just make half back. And then now you're like just digging yourself a hole. And like 4 trades later, your account's down like 5, 10, 15%. And then like later that night, you're sitting there with like a wine and you're like,
why didn't I stop at 10 a.m.? Yeah.
I was so that was so fucking stupid. Like that's,
the worst is whenever you're realizing you were wrong, but at the same time you're realizing you were right in your head. You're like, I did have the idea to stop at 10 in the morning. I did. That idea did cross my mind. I ran it past my friends and they said, yes, that's a good idea. Take the day off. And I still sat there and lost another 10 grand.
Exactly. It's at this point inside our accounts, it's like one of those days is like a car. It's like I could literally just go buy like a Toyota Corolla and burn it. And that would be as productive and waste the same amount of money as
just revenge trading. Yeah.
As just revenge trading. And think about it this way. You could probably monetize burning that Corolla, put it on YouTube, and then you get some money back. So, and
it'd be fun.
And it'd be fun. Yeah. Like losing revenge trading is not fun.
No, there's nothing fun about it.
Dan, that's what we're going to do next time.
Yeah.
And then put it on the PGIR YouTube.
Yeah. We'll just buy a Toyota Corolla.
Our sponsors will love it.
Like, what the hell's going on? They'll think we're having like a midlife crisis. Well, kind of going into this whole episode, we, whenever we first started the podcast on episode 1 through like 15, episodes 1 through 5 were really bad, but the topics were, the topics were really good.
Bad.
They weren't great. But they had the right meaning behind it. So that's what matters. However, it's been a year. Our mics are better, our brains are bigger, and our accounts are wider. So I think it's only proper that we go back into it. So just goes to show how much we prep for these episodes. I am guessing episode 1 was accumulation, if I recall correctly. So, with no further ado, accumulation, without telling you guys how many seasons of Teen Mom there were, like in episode 1.
Dude, episode 1 was consolidation. We didn't do accumulation until like...
Okay, so episode 1 was consolidation. However... We're going to do accumulation because I already did the intro to the podcast. So, accumulation. Very similar to consolidation. Things accumulate and then consolidate.
Yeah, we could do both because accumulation and consolidation really, really come hand in hand. And so when we first did those earlier episodes, the format that we would do is that we would read what Investopia would say and then we would break it down. That was like pulling teeth for me. 1, because I didn't know half of the words that Investopia used. And 2, it was horrible. That's not fun. So if you guys want the Investopia definition, you can go back and listen to those.
Or just Google it.
Or no, don't do that. Get us our views.
Go listen for like 20 minutes in the podcast.
Actually, if you're gonna listen, you have to listen all the way through so that it doesn't mess up like our cutoff stats.
Yeah
So
just leave them running. You can do like 4x speed. It's pretty fast. But no, accumulation, consolidation. I think we start with accumulation. And I think bringing this to something like that everyone's on, so it's like everyone knows and can visualize a chart, because I'm sure a lot of you guys are driving and shit, and it's pretty dangerous to do so. So everyone knows the Wish chart because everyone's in Wish. So you kind of see it doing the accumulation dance. The day the market was tanking, Tuesday, it started accumulating when everything else was tanking. So, I mean, kind of going off of that, like, what did you see? Like, what do you look for to know if the accumulation is going to end up in an uptrend or downtrend? Like, where do you go after? And then, like, just to know, is it accumulating or is it just fucking stagnant?
Yeah. So that's a really good. That's a loaded question.
Yeah, there's like 6 in there.
Yeah. So I'll take it
one
by one.
Yeah.
The first and biggest thing when you're looking at the Wish chart is that there's a clear support and resistance line in the sand at 15. Okay. When looking at the 1 year, 1 day chart, if you go back to March, that was the support. Okay. It bounced off of there twice, but it was inside a downtrend. So it bounced, come back, bounce, and then it finally broke down. And since then, it hasn't been able to break it 3 different times. You can't really get, you really can't get a better picture than Wish with a line in the sand at 15. That's what it is. Now, that being said, we talked about last weekend, last Sunday's episode. Yeah, was it last Sunday or was it Wednesday's episode when we talked about breaking the downtrend of Wish?
I think it was on Wednesday.
Was it? Yeah. So Wish was kind of inside this small downtrend for the past, really, let's call it like the past 2.5, 3 weeks. And what it was trying to do recently is break out of that downtrend. And it looks like it had that massive, was it like a 6% day just earlier this week where it broke through that downtrend. And right now, what it's trying to do is that it's trying to find support. And so to look at accumulation, what we really would want to see is that we would want to see the stock not move much, but the volume bars to go up huge. So if we look back at the UONE chart, okay, that was a Juneteenth play. If you look back at the volume bars, it had a massive volume day where it basically traded the float like 5 times, but the stock really wasn't up. The stock was up like 8%. And for a low float like that, that's not a big move. And the day that it had that massive move where it went like 120%, it had half of the volume of the day that it went 9%. So I'm going to say that one more time. They had, leading up to Juneteenth, they had this one big massive volume day. That whale probably locked up the float. Okay, we can assume that. When you then look at the day, so like I said, it had a massive volume day, but not a big percentage gain day. Then when it had that massive move up where it doubled, it had a massive percentage move, but not as big of a volume move. And so what we can infer from that is that someone came in, locked up the float, and then it didn't take that much volume to just fly. So that big volume candle that we saw is a good accumulation candle. Now, with Wish, we've been pretty low volume. So it's been a pretty low volume downtrend. What we would want to see is that it's created pretty good support around this 10 area. So if we start to see really big volume coming in there and the price not moving, that's accumulation. Now, the good thing though is that we would also want to see, okay, so that's the one route. The other route that we would want to see, just and this has not as much to do with accumulation as it does to do with Wish, is that now it's broken that downtrend. If volume comes in and it really starts to curl, it can be back at that 14 spot quickly because that big explosion that we saw through the downtrend is really bullish in my opinion. And so what I would want to see is news would help it, like a kick-ass earnings or something would definitely help it. But any kind of volume and any kind of volume, I think that this thing starts to break out because we're really in low volume right now. So I mean, it won't take. One day it had almost 200 million shares traded. I mean, we've been trading like 30 million a day. So if we ever did like 100 million volume day, I mean, I think we're back over 12 personally, because it is just that thin.
So how can you tell if there's like a lot of volume in a stock and it doesn't move? How can you tell there's not just a decent amount of selling pressure and, it just seems to be like just traded, up and down that day? And like, what do you look for in a chart to see that it's volume that is accumulation from like a whale locking up a float as opposed to, what can you look at on the 1 day chart to notice for that?
Yeah, it's really not going to be on the 1 day. The 1 day, 1 year chart is what I like. I also like the 180 day 4 hour. But this is where like you kind of have to have some high level thinking, because you're not just going to look at like any other chart and a big volume day. You're not going to be like, oh, there you go, accumulation, baby. That's not how it's going to go. You have to really. It has to be some high level thinking. So, I'm going to go back to this UONE. UONE had Juneteenth, okay, and
so you kind of have to base it off a catalyst coming up.
Yeah. I mean, that's when I like to look at it. So when I look at something that has a catalyst, like for instance, okay, I'm going to go back to this Juneteenth, okay. So it was May. It was May 18th or something like that, where it traded 62 million shares. Okay. The stock moved like 50%. Okay. But again, it traded 60 million shares. All right. So this is literally almost to the day, a month out from Juneteenth. Okay. So the light bulb goes off in my head. Hey, someone realized it was May 19th or May 18th and that Juneteenth was coming up, and remembered that UONE flies. So what do? They come in and lock up the float. Now, when we get closer and we have this massive move in 1 day, only 26 million shares traded that day, but it had this massive move. So all it took was half the amount of shares to make a much bigger move. So that's when, it's a perfect case study when you can look back at it and say, okay, so someone came in there, locked up the float, and then they came in there, locked up the float, and again, it only took about half the amount of shares to make it fly, to like double from there, almost triple from there. So those are the things that I kind of look for, is that I look for a catalyst that's well known, but we're far enough out, because these whales, again, they only need a few big wins. They're not day trading news. Like, that's not what these guys are doing. Okay. They're going to sit there and they're going to be mindful, and they're going to say, okay, I know that this is a runner. Boom, lock up the float and wait. That's all they do. They wait.
Is there ever like something that the retail trader should have to worry about? Hey, this guy has so much of these shares, he could rug pull it at any time.
Oh yeah. No, you look at UONE. It got killed after, because again, he's got to get rid of his shares one way or the other, and he's not going to care about how he gets rid of the shares. He made 2.5 times his money if he had 30 million shares.
He's in a bar like at the end of The Big Short on the phone with the bank trying to get rid of him.
Yeah, exactly. And so that's the thing, is that he doesn't care. He's just trying to get out of the stock at this point. He made his money, so he doesn't care how he gets out. So that is something to keep mindful, is that but that's the thing. That's the beautiful thing about not being a whale, is that you can get out. He locks up the float for you. That's great. Lock up the float for me. Just be before him. Okay, that's going to be the key. Is that because once he starts to dump it, you could just halt down. Now, you see where this thing was trading like a week later back in like the 7s, which is probably where he bought it. So even though he was, let's just say that this was him dumping it from 15 to 10, again, he's still making a great return, because it just comes down to numbers. If he has 30 million in the stock and he's up, even if he only makes 50% overall because of slippage, dude, like there's nowhere else that he's going to make that kind of money. So, but I think that's important to note that if you do see something like this, like especially on the low floats where that there's a whale in there and he's going to dump it because he will, they always do. This first sign of dumping, you got to be done with it. You got to be done with it. Are you going to ask how you identify the dump?
No. I think it's pretty obvious how you identify a dump. The stock
Well,
starts.
no, because there's two different kinds of dumps. There's just a low volume dump where there's not that many bids, and there's a massive exchange of shares. The massive exchange of shares is the real dump. So that's why I usually have my time in sales queued up to over 5,000 shares. That only shows that, because I don't care about like little algos doing like 100 shares, because sometimes, 100 shares, if the bid is really thin, 100,000 shares can take it down. And so on the chart, it can look bad.
Yeah, you used to be able to see that a lot in like after hours and pre-market and these penny stocks. Obviously, there aren't nearly as many anymore, and we're not trading as many. But back whenever we were trading these stocks under $1, and you could see them to the fourth decimal, like you would see them tank like 2 or 3 cents with only 10,000 shares traded in the morning, and that 3 cents on that's like 5-6%.
Yeah, exactly. So exactly. So that's a great point, is that, what you really got to look at is the time in sales. Because when you see that big, large exchange, like I'm talking like, 6-7 million, like something that like, most people don't have, like someone like 6 or 7 million shares, that's something where the light bulb has to go off and you have to say, oh, okay. Because then that's going to start the run. That's going to start the run off on the dump once that happens. So, that's going to trigger algos to sell. It's a whole big thing. But that's going to be one of those times where the muscle memory has to say, whoa, huge share exchange. What's it going to do? It starts to dump, boom, immediately out and be done with it. So I think that's the first way about accumulation on like the smaller catalyst low floats. Okay. Then you have, go ahead.
Oh, no, I was just going to say, are we transitioning now into just accumulation aside from just, whales?
Yeah, well, exactly. So accumulation. So that was like more like accumulation for like the low floats. And that's because UONE, I felt like, was like a really good case study where I had the catalyst, I had the whale. But what I want to go to is accumulation on larger stocks, because this can be more difficult to tell. And then what we'll do is that we'll also talk about how, because accumulation and soaking on the news, when you see like those parabolic runs, we'll also tell our listeners like how you can kind of identify that. So I think that for the case study for the larger stocks, the perfect one is OSTK, Overstock. I had this stock at $8 last year and it dumped all the way to $3. This thing got walloped during COVID. It went all the way down to $253 from $28 a share. And all that was just someone trying to get out of the stock. It was super low volume dumping for like 6 months. The stock got walloped. And then what you see is that around that April of not of 21, but of 20, around April of 20, when it started to bottom out at that 253, you start to see volume coming back in. And so there's clearly somebody in there. We go from trading OSTK, if you're looking at the chart on the one day, on the 3-year week, it went from trading 5 million shares a week to trading 43 million shares a week. And the stock wasn't moving that much. It was moving, it had gone back up to like $8 a share, which is a pretty good return. But considering where it was still down like, 60% from the highs. So that's one of those times where you can kind of look at it and be like, oh, okay, it's starting to catch a bid, it's starting to catch some volume. Those are the times where you can say, okay, let's just say it's sitting at 8, it's trading at 28. I think that we can get 14 on this because volume's starting to come in, starting to catch a bid, something like that. This thing, I ended up dumping it at like $30 a share. This thing ended up going to $128 a share from $253 in a matter of months. That's insane. And it wasn't like anything fundamentally different that the stock did. COVID obviously had a help in it, but just insane. And so that's one where I think that you can look at, and you can, on the larger cap side, you can say, okay, this got beat down on low volume. It's starting to catch volume and starting to catch a bid back up. Those are one of the ones where you can take like a swing scalp for, a few dollars a share, and it's no big deal. And you don't have to know too much about the company. You just say, hey, here's my stop loss, here's my resistance, here's my take profit, stuff like that. No, you want to move on to soaking intraday. So this is really important, and this one's probably the most difficult to identify. And that's because Gary's really good at this, and Tommy's really good at this. And what they're really good at doing is that they're really good at identifying the difference between a stock that is just bouncing on support and is about to break down, and a stock bouncing on support and someone's sitting there soaking it. So Nate, remember when Nate Mackay came on? His episode's really good. Yeah, is that it's
Nate Misha.
Sorry, Nate. So when he came on the pod, he had talked about, he explains it way better than I do. He talked about it how intraday, if you start to see a support and it's literally defending that spot to the cent, like I'm talking like if it's like 1143 and it goes under and it wicks right back up, or it goes like, let's just say it hits 1138, but then it wicks right back up to 1145. That's someone defending that line in the sand. And that usually means that there's just someone hiding their bids and just sitting there soaking the volume. And what usually happens is that it usually breaks out. And that's a really good one that, you can kind of see it. If they're just sitting there all morning, it goes up, comes back down, bounces, goes, and, you just start to see like those hills and valleys. That's one of those times where you can get a really good risk to reward trade. You can have your stop loss maybe like 3% down because, again, someone's defending that line in the sand, wicking it back up, so that if it does dump, fine, you lose 3%. But if that is someone defending that line in the sand and someone's soaking, that's one of those times where, hey, if they're, sitting there soaking, and I'm talking massive shares, I'm not talking like 200,000, I'm talking like they're soaking 5, 10, 15 million worth, then, you can have one of those parabolic moves. If they're just getting shorts in there and they're popping it back up, letting shorts get back in, letting shorts think that it's about to flush and then popping back up, just collecting shorts and also soaking shares. That can be one of those times where, like, you see one of those, what was it that just ran last week? Was it something with an NAOV or something? Or I forget, but it like doubled after hours. And I forget the stock. I don't remember. But my point is that they're creating the perfect storm. Like you sit there after the fact and you're like, oh yeah, duh. Like it was defending that spot. Shorts were packing in. And all it took was some guy just soaking up shares and then sending it. And this thing doubled. And again, you got to be careful because once the dump starts, it's over. But that's a trade that can give really good risk to reward. So those are the times where you got to be in front of the screen and you got to say, okay, here's 1142. Okay. It went under 1142 and wicked right back up. Went under, wicked. And so you can literally just draw the line in the sand and someone's defending that spot. Those are the times where, again, you can take a really high risk to reward trade where it's basically like your risk is 3%, let's call it, and your reward is like 25, sometimes like 30, 35%. And it's one of those where, again, you don't need to necessarily have like a take for profit. You can, again, watch level 2. And if there's no massive share exchange to the sell side, then, you can sit there and you can just let this thing go, because sometimes, you get one of those like Kodaks where it goes 1,000%. So those are the times where I like to be a little bit more risky, and I can say, okay, fine, I can take a big position with this guy, knowing that my stop loss is 3%, but my reward chances can be, insane, can be like 30%. So those are the more difficult ones to identify, and those are the ones where you got to really sit there and put in the time in front of it and put in the screen time. But one of those can make your month.
So I know you mentioned your stop loss for those. Is there a valuable strategy that you'd recommend as a stop loss for those to ensure that you have good risk management, but also aren't, missing out on the move should it come? Like, let's say that 150 is where, the soaking is occurring. How much lower do you let it go below that 150 once that guy's got all his shares until you say, okay, maybe this isn't exactly what I thought it was?
Yeah, and that's again is that when we have those knives, that's another thing is that sometimes you sit there and you're like, oh, this thing's totally soaking, and then just knives, and all it was somebody trying to collect longs, So sometimes you think you're collecting shorts, and sometimes and you're gonna bamboozle the shorts. And sometimes you're the one getting bamboozled. And that's just the way the game goes. And that's why you got to have a plan. So the way that I look at it is, I try and see the price action. So sometimes, as I said, is that it'll wick down and then wick immediately back up. So I don't want to have my stop loss too close. And in general, I don't really like to have stop losses. But that being said, if there's a massive dump with a big share exchange, that's when I can be done with it. So even if I take a 5% hit, that's fine because I knew my risk to reward and I liked my risk to reward. It fit my parameters. So if we're looking at like $11 stock, and you feel like it's soaking right at that 11 level, 10.75. Lose a quarter a share. That's one of those things where, if it hits your stop loss, it's probably not wicking back up. That's a pretty, that's a good amount. But at the same token, you're giving a little bit of breathing room. And again, it's going to be based, this isn't a systematic strategy. So it's not like, 3% is 3% is perfect. But that being said, you can totally sit there and say, and it's going to be based on your risk parameters. If you're like, hey, if you feel really good about it, fine, put your stop loss at 10.50. Give yourself 50 cents. Or if you're not really feeling that good about it, keep it a little bit tighter. You can even keep it, at the low of that 3 hour stretch, and that's fine. That's fine. The way that I look at it on things like that is that as long as you identify your risk to reward and you're not taking, you're not being stupid with your risk, then even if you lose, I look at that as a win because you're gaining your confidence. Even though it didn't work out how you thought it would, you said, okay, there's a 7 out of 10 chance that this is gonna go up and that this guy's soaking. And guess what? It comes down to a numbers game. You're not going to hit every one. In fact, you're probably not even going to hit 50% for years. There's some months where I don't hit 50%, and that's fine as long as the ones that you hit, they're home runs or they're really big wins, and the ones that you strike out on, you're not putting your entire account in. So I think that it really comes down to your risk management. It really comes down to your risk appetite, but. I'm not a great day trader. Gary, on the other hand, if he feels that 11 is the line in the sand, he'll just keep accumulating shares. 3 weeks ago, we talked about it. I lost 70 grand on the same stock that he made 400,000 on. And that's because I was like, dude, fuck this. This thing just dumped hard. And he was like, man, I'm just going to keep buying more and see what happens. I was like, why? But hey, like I said, he did feel the soaker in there. The soaker just faked me out, and Gary just got bigger and bigger inside his position, and it ended up flying. So, it really does depend on yourself.
So in that situation, wouldn't Gary also be the soaker? He's got an account size at the point where he would be assisting the soak.
100%. At his account size, he's assisting the soak. But with these guys, these are if it's a $10 stock, he could be accumulating 7-8 million shares. When it's in a good market, some of those stocks trade 100 million shares. So some guy accumulating 30 million shares is not crazy, he's not all the volume. That's a lot of money moving around.
Is there a way to kind of use we use the word whales 1,000 times this episode. Is there a way to take advantage of Unusual Whale's Twitter account for shit like this?
Yeah. Unusual Whales has a great a great amount of data. And, I know that data can be overwhelming, but that's where you gotta kind of find your niche. And that's kind of where you gotta say, okay. Oh, dude.
If you can't handle overwhelming, trading's going to be tough.
Trading's going to be dude, the amount of, it's funny because I was talking about this with someone, the amount of stimuli that it takes to trade is incredible. Even at the lowest level of trading, that's why I think it's not funny. But when someone says that they're struggling to understand trading, I'm like, yeah, dude, like me too. Like I don't like I'm still at we're still at the tip of the iceberg, bro. Like I'm 8.5 years in. We're at the tip of the iceberg. Like there's so much. There's like a whole different
Antonio
universe.
Coast has been trading for 413 years and he's still learning.
But that's like that's the beautiful thing. That's why I love trading, because there's so much data all the time and it's always ever changing. Tuesday, the market's tanking. Thursday, we're at all-time highs. It's anarchy every day. It's awesome. I love it. But to your point, yes, Unusual Wheels has a great system, and you can and again, Unusual Wheels is not going to be like, oh, buy this stock, but he's going to give you that information. And this isn't even an ad for him, but I mean, if he wants to pay us,
we'll take it. Open. I don't even know if he listens.
Yeah, we'll take it.
Yeah, if you hear this,
yeah, send us a DM. We'll actually put something together. But my point is that he's not going to give you buy and sell signals, but he's going to give you that data that says, hey, someone is buying the fuck out of this thing, or hey, these options. Unusual options are a really great way to tell. For instance, I remember I was trading Goldman Sachs for their earnings report, and they had a knockout earnings report. Guess what? The day before the earnings report, someone bought 2 million options expiring in 2 weeks.
Do you think unusual options like that are most of the time insider trading?
100%. It's going to be somebody's sister's boyfriend's grandmother's aunt is doing it for a kickback, and that's hey, listen,
part of the game.
It is what it is. It is what it is. Like good. We're not going to comment on it, but good for them. And that's the thing is that it's crazy because that data is in front of our face, or like Nancy Pelosi, I mean, maybe she was insider trading, maybe she wasn't.
Maybe she just is really good at predicting earnings reports and shutdowns and stuff, You know
what the funny thing is that I do think it's funny because she has like a team of financial advisors, so she isn't trading. Maybe she gets the information. Listen, I don't know. Nobody knows, but maybe she does get the information, and maybe she slips it on a note or something. I don't know, but I always think it's funny when higher level people like Shaq, like Shaq's on public.com. Do you really think that Shaq is sitting there with his Robinhood app, like buying, Amazon? I highly doubt it. He's got some dude named Wilbur sitting there, sitting there buying it. So
imagine it's really tough for Shaq to buy stocks or just use apps in general. He's got really big hands. He's fingering like 40,000 shares of Amazon.
His cell phone is an iPad.
Yeah, no, that's what I was thinking. I was like imagining him on a phone, but I was like, it's got to be like an iPad mini.
It has to. But back to our point is that when you have so much data at your fingertips like we do, okay, everybody has the same data, everybody can get the same data, but it's what you do with that data. And so that's when, if you can kind of start to formulate, like when I first started trading, I used to find in filings, and I used to follow certain doctors into certain plays. And that's because, there'd be like a coincidence, like, oh, Dr. etc. worked at the same hospital that studied this drug. And all of a sudden he's buying 2 million worth. And it's like, how is this legal? And then it's like, oh, he didn't work in that department, just at the same hospital. And it's like, oh, Okay. And then boom, what do you know? 2 months later, FDA approval. Do. So it's like things like that where, you can milk the system. Find, go back through filings, see who made a killing, who bought the stock a month ago and, who sold it today. It's things like that where you can find different patterns. And I'm not saying they're all insider trading. I'm not saying that, but I'm saying that this data is out there for us. So if you find like a hedge fund manager like Cathie Woods, okay? Cathie Woods nailed it out of the park. Anything that she bought for the next 6 months doubled the day that she bought it. And that's just because everybody felt like Cathie was a god. Cathie Woods was a god. So my point is that, yes, there's tons of data out there and you don't need to just trade one way. And there are ways, like for instance, following Cathie Woods into a trade. That's a way that you can kind of, you can scalp her plays. That's fine. she scalps her plays. So I think that there's other ways to trade.
Imagine Cathie Woods tweeting out plays like Zach Morris kind of.
I mean, that's basically what she does. She has a newsletter. Like that's basically what she does. It's like, oh, ARK bought Skills today. Skills doubled on that. They added like $1.5 billion to their market cap the next day. And I was like, oh my God, why didn't I just, the second I, there was an easy way to game that.
Dude, we should make shirts that say Cathie Wood is my favorite Furu.
I wish we could get her on a podcast because her intellect is so next level. I would love to dive into that brain of hers. So
it's kind of
so interesting. Too. Yeah. Her intellect or her?
No, I mean she I mean like for a politician, it's like, oh fuck, oh my God, I thought my computer fucking crashed. Holy shit. I go look up a picture of Cathie Woods and my computer damn near crashes. I was about to say I couldn't hear you. Talk real quick. Okay, yeah. All right, so just try to look up a picture of Cathie Woods and my computer wasn't having it. So take back my comments about you, Cathie. You're no longer attractive to me.
But yeah, the overall point is that I think that there's more ways to make money by using different data points that like people like Unusual Whales gives. That's my point.
Okay, well, that's it for accumulation, and I think we might have mentioned consolidation once. If not, we'll do it another time. But no, I think it's time to get into some Fintwit stuff. August is coming up, and every time the market's slow, we lose a Furu or two. So make sure to drop your predictions in the comment which Furu isn't making it out of August, because you always lose one.
Who do you think it's going to be?
Shit. I have a feeling it'll be like someone that calls swings. That.
Whoa.
Yeah, no, not you. Sorry. Someone that like calls swings and is very bullish on swings and doesn't and is not preaching right now like, hey, like guys, we need to stay cash heavy. Like I think a lot of people that are not cautious at all and are very swing. I'm not sure who it is yet, but I'll find out. You gotta wait until like.
So the naive. You're saying the naive and the reckless.
Yeah, there's gonna be some fucking Furu. Not sure who it is. I can't put my finger on it. If
probably Tommy.
Yeah, it'll be Tommy.
It'll be Tommy. He just bought a new card.
Yeah, he is reckless. And so another
money.
Another Fintwit news. Mr. Zach Morris had a face reveal.
Dude.
Crazy.
That's I got like 20 text messages. Dude. So obviously I was inside that picture. I had more people message me saying that I had a twin inside some trader. Like I'm talking people from high school. There were more people from high school that reached out to me about Zach Morris' face reveal, saying I had a twin, than anybody that knew that I was like a trader. Like I had one girl, I swear to God, DM'd me on my personal Twitter, on another Twitter. And she was like, hey, like, do you have like a long lost twin? Like, look at this kid. Like, And then she was like, and like, I don't know if you're into this thing, but like Mr. Zach Morris has made millions trading stocks. And I was like, no shit. Like he sounds like a beast. And then I was like, dude, like, like that Hugh Henny guy, like whoever he is, like, damn, he looks like a beast too.
Pussy.
And she's like, yeah. Yeah, and I mean, like, it's just insane, like the way that he's blown up. Like, it's crazy that he's like a household name almost.
Yeah, he's like the Olympics. Like every time he makes like a banger call, like we all, I don't know any gymnastics like gymnasts until they come around to every 2 years. So.
Yeah.
Not saying Zach's calls are only like sparingly every 2 years, but he has those ones that bring him up at dinner time tables. The Fubas and the AMCs. You're like, Dad, I've got dinner on Zach.
On Zach. And then it's like, Dad, come here. I want Zach to see this. I want Zach to see you. And Dad's like, I can't wait for him to see us together, son. It's like it's just insane. I mean, this entire community. Even last night, I'm out last night, and someone recognized me. Craziest thing. We went to the same college. We were at the same graduation, and he's like Hugh Henny, and one of my boys was like, "Oh God," he's like this thing, and then it was like Preston. It's like. Dude, like, and they like know each other, and we went to the same college, and we had never met each other, but he knew about pennies going wrong. He knew about Zach Morris, Hugh Henny, and I mean, it's just crazy, this community.
Yeah, I slept with this chick who mentioned another dude she was sleeping with, which I thought was a little, weird that she brought that up, but as a man and a feminist and someone who believes in free spirits, I, didn't immediately shut her off, and I kept listening to what she was saying, and she was like, yeah, and he listens to the podcast too, because she was wearing my shirt around him. Yeah, so it was a big like, wow, this is cool, but at the same time I'm like, you could have just said it was like your friend.
Friend?
It's just like, some details just don't exactly have to always be mentioned, but to each their own.
You know what though, buddy? She was wearing your shirt around him.
Yeah, so when she came over, was she wearing his shirt?
I don't know. Was she wearing a dude shirt?
Nah, she just got off work. I don't know. I'm tired of talking about this. I'm about to go cry. All right, guys.
Where's she work at?
I don't think that fucking matters.
What if he goes into her work? Are you going into her work? Dude, you got to be a step ahead of this guy.
I'm not going into her work. I'm moving in like 3 weeks. I was just saying my goodbyes, Anyway,
this was a fun episode. I had fun doing this one.
Okay, good. I sound like a fucking douchebag to end it. Anyways, I love you guys. Bye. See you on Wednesday. We have announcement, maybe a guest. Bye.